Good morning. This is Larry McMillan with a stock market update on Monday, September 27th, before the market opens. So last week we didn't quite get the full recovery rally that we'd like to. I know the bulls are quite excited about the bounce off of last Monday's deep decline and then recovering above the gap at 44.30 and closing higher above that and everything. But really, there's still resistance above here, all the way up to the moving average at about 44.90. And typically oversold rallies, and we were oversold last Monday on the close. Oversold rallies typically rally up to about the 20-day moving average, which is declining at that point, and maybe even go a little bit through there. So I'd say, something up towards 45.20 would still be in the realm of a short-term declining market. So despite what we've seen with people crowing about making money on the VIX and etc., it's really not a done deal yet for the bulls. However, we do have some buy signals in place, so that's quite interesting. One of them is that the S&P 500 closed below its -4 standard deviation modified Bollinger Band last Monday, and then gave a McMillan volatility band buy signal on Wednesday. So that's in place, and it's the first buy signal we've had from this indicator since March of 2020. So that could bode well, of course, for the intermediate term. That's really more of an intermediate term indicator. As far as support goes on the S&P, it wiped out what previously had been thought to be support at 43.70. In fact, when it gave way through there, it created a lot of selling. And so the first support level was last Monday's low, right around 4,300. And then the same ones that had existed before are below that. So as long as the S&P is staying above 4,300, the bulls are still basically in control, just perhaps not as much in control as they think they are. The equity-only put-call ratios are on sell signals. They both moved higher. There was a lot of put buying last week, especially even on Friday. And so those ratios have not joined in with the perhaps bullishness of some of the other things. Our breadth oscillators got deeply oversold early in the week and then bounced back and gave buy signals in the middle of the week. So the oscillators are on buy signals, and that's, of course, a short-term positive. There's also what we call an oscillator differential buy signal, which is a very short-term indicator as well. The problem with breadth indicators is that already breadth turned quite negative on Friday, and overnight, Sunday night, tonight, the futures were rallying strongly. We're up about 33 points and then just turned around and dropped 50 points. So on an opening this morning, we're probably going to see negative breadth. And if there's too much more negative breadth, this is also not going to be good for the market. As we know, breadth has been struggling for months now, so this is not hardly news. But, so one of these days we were kind of hoping maybe breadth would get back in line. It just doesn't seem to be this day. The new highs versus new lows, that continues to be a bullish indicator as new highs continue to outnumber new lows. Not by a lot, but by enough to keep the indicator positive. The volatility complex, that's much more positive, at least the implied volatility complex. VIX gave a spike peak buy signal as of, I believe it was Tuesday's close last week. And so that's, once again, a positive indicator. And the trend of VIX is still positive right now. However, a danger warning, maybe, is developing in that the 20-day moving average of VIX and the 200-day are now only about 1 point apart. The 200-day is at 20 and the 20-day is roughly at 19. If the 20-day crosses up above the 200-day and VIX crosses above it as well, that's an intermediate term sell signal. So we haven't been anywhere near that since the last one, which was February of 2020. So this is just something to keep an eye on. It's still in positive territory right now, but it could, it's not that far from turning negative if the market were to have a steady decline and VIX were to rise from here. The construct of volatility derivatives is positive in that the futures term structure slopes upwards, and especially in the fact that the November futures are trading at a higher price than the October futures, that's VIX futures. So all in all, the indicators are somewhat mixed. It's still a generally bullish S&P chart because of that support at 4,300, and the trend lines are still moving higher, although not not as much as they had been. So if it can break on through 45.20 and rise on past that, then the bulls will have won another easy victory. If it can't, then we're still could be in line for some short-term decline. October is generally bearish in the beginning of the month, and we're entering October on Friday. And so, we're just playing our indicators as they come about. As we saw, there are a couple of buy signals and also some sell signals. So we are playing each one individually, but only when they are confirmed by market action. In any case, have a great week trading, and visit our website where we update all of these indicators daily.